want to give another big thank you to our platinum sponsor, First Insurance Funding, for sponsoring today's session. First Insurance Funding is the largest independent premium finance company in North America and specializes in providing complete financial solutions to its customers. For today's sponsor spotlight presentation, we've invited First CEO Mark Steenberg to join us to provide additional insight. Mark joined First in the year 2000 and has more than 30 years of insurance industry experience. Prior to joining First, he was a senior leader at Kemper Insurance in Long Grove, Illinois. As CEO, Mark directs First growth through operational advancements, innovations in technology, and strategic initiatives. He's responsible for the success of First's Canada division and more than 300 different team members. Mark, thanks for joining us. Glad you're here.
It's good to be here, Phil.
I wanted to start with a couple of questions. Again, we have a lot of firms that work with premium finance organizations, but I thought it'd be a good idea, especially in challenging times like this, to get into a little bit more depth. So just to kind of start, how has the premium finance world changed since COVID-19?
So thank you for having us. We're pleased to be a sponsor and partner with Marshberry, and pleased to work with the majority of the agents that are probably on this call. So like everybody else with COVID-19 and the effects on the business, one of the silver linings is there's been a bigger demand for premium financing. Those insureds that may have paid cash in the past, we're starting to look at preserving their cash and lines of credit for other use. And so premium financing was an alternative. So that was one of the silver linings that affected us in a positive way. As well, John talked a little bit about agents moving away from agency bill, the effects of not wanting to take credit risk. Again, premium financing was a good option for many insureds under those circumstances. The challenging part of our industry and what's facing the insurance industry in general are the 50 different state emergency orders that affect everybody differently. And that's been a very big part of our day-to-day business. It's been a big part of our legal team to make sure that we're on top of it and that we're managing it appropriately, that we're providing relief to the insureds as not only required, but what's the right thing to do. And so that's been a big part of how we've been reacting to the COVID-19 crisis.
Appreciate that insight. And then I guess as we think about, all firms, all businesses have been kind of impacted and we're working remotely. What's your experience been within First and any operational changes that impact the way you work with your clients or agencies?
So the good part in working with our partner agents and insureds is that technologically we were able to get out on day one. We put everybody working from home before the state of Illinois closed the state. We put everybody out in early March and just simply said, we're going to work remotely. There were too many unanswered questions and people didn't know what was going to happen. From a technology standpoint, we had developed a e-complete platform that allowed for signatures to be collected electronically, fully embedded within the process. We could collect down payments electronically via ACH debit or via any of the major credit cards. And we had that all rolled out and ready to go about a year ago. So one of the interesting things is in the month of March and April, our number of loans that were completed via e-complete has gone up 46% year over year. And the number of users that have adopted e-complete within our existing agency base has gone up 3 times what it was a year ago. And so with the whole world working from home, those that are able to, being able to do things seamlessly, electronically, and provide those services just worked great.
How about requirements? So when you look at premium finance situations, have the requirements become more stringent given the economic uncertainty we're seeing?
The short answer is yes. We did a lot of business in oil and gas and travel and tourism, and all the industries are distressed. And so in the past, where if somebody were strong financially, I might take some credit risk, those days are really challenging. But the good news is the vast majority of our insureds, we finance with 15 to 20% down and 9 or 10 payments. And for the vast majority of our bread and butter accounts, mid-market, we're still offering 15 to 20% down and 9 or 10 payments, We're just having to ask a few more questions and make sure that it's still a viable alternative.
Excellent. So how about agencies? I mean, broadly, do you think that they underutilize premium finance services?
So historically, I think the answer to that is yes. It was sort of an afterthought in terms of how is the insured going to pay for their insurance premiums. What we've seen over the past 45 days is that cash flow is paramount. It's one of the discussions insureds and our top leading brokers are having on a day-to-day basis. You know, current accounts where they're in the middle of their premium finance program are saying, I need my return premium now for a reduction in exposure. And so we're reacting to that positively and holding cancellations, knowing that there's going to be a midterm endorsement. And so the brokers are having questions midterm, and as well as obviously at renewal or for the 4-1 accounts, how do you want to pay for this? So again, a lot of those customers that maybe use their lines of credit or paid cash, the brokers are presenting another option, premium finance. And premium finance is a off-balance sheet mechanism that most insureds are able to utilize without any effect on their existing lines of credit. And so it's been a big part of strong insureds that historically have paid cash are now choosing to premium finance. The other big part that agencies are realizing is that there is a revenue source for premium financing. It's not the most significant part to their business, but it's certainly an important part. And so managing that from the top down has been a strategy that they've employed.
When your relationship may be with agency management, do you think there's a communication gap between agency leadership and producers who, may be talking to the clients around the usage or value of premium financing?
So in the past, I would have said yes, absolutely. But now that cash flow is a part of all of the conversations and how insureds are going to make it through the next 30, 60 days, and what can the agency principal and partner and the premium finance partner do to help them. We take calls every day from agencies that are saying, can you delay this payment? I've got an insured that's expecting $10,000 in a credit. Can you apply that to the next installment? And that is a big part of what we're doing, is the service to our existing customers and providing solutions. Make a partial payment, we'll hold cancellation, we'll do different things for you. The other thing we're realizing is that if in the past insureds were presented with a direct bill option, many of our partner agents are saying, here's your 25 and 8 direct bill, but I can also get you 15 and 10 for a little lower down payment and a little smoother cash flow. Not to mention you could put 2, 3, 4 different carriers on the same premium finance agreement, cut your cost, sign up for ACH debit, have no transactional costs, sign up for e-bill, make it all seamless and electronic. And that's been a big selling point as well.
That's excellent. Thank you, Mark. Really great information. And I really appreciate you joining us. Again, I think every little piece helps, and having tools available for producers to try to do the right thing to support their clients is only going to help ingrain them as strategic partners as opposed to vendors. So really appreciate it.